Hey, welcome back to the Stock Estate, everyone. And today's video, we are going to talk about value plays. Okay, I know that this entire channel has been centered quite a little bit around the swing trade aspect, but however, as you know, I was an ex-financial advisor. Those were the fun parts, but I would like to focus more on the more serious aspects of investing. Okay, although this is not financial advice, but I do want to be your brother over here and just talk to you about things. So firstly, I know that everyone is a little bit edgy about whether there's gonna be a crash that's coming soon, and with the market at all-time highs, it's quite possible. So what we have to do to minimize our risk, right, is to diversify our portfolio. Okay. And when I mean diversifying portfolio, I don't just mean that diversification in terms of industries or in terms of different companies, but rather in diversification in different kinds of plays that you have. Okay, right now I think a lot of people are in this growth space, where people are very invested in companies that have high growth that is projected in the future. But this tends to lead to overvaluation on growth plays itself. And the value plays which has been severely beaten down in the March crash, those are actually very neglected. And those plays are what I call the turnaround plays or the reversal play. Okay, if you don't know how to play a trend reversal, do look at my tutorial. Okay, I'll link it in the info card above, and you can click it to watch it later. But basically, those value plays are already at rock bottom prices or very cheap, very cheap prices. And recently, they have just started to show an uptrend. And those are the stocks that I would use personally, to hedge my portfolio or to start rebalancing and include more of those kind of plays. Because if a market crash happens that is as bad as March, right, those plays are already so beaten down, right? Their valuations are so cheap, right, that they have a base business, right, that it just can't go cheaper than a certain area. And I'll explain to you how and why in a bit, although you might be a little bit confused, like what do you mean by the stock can't go lower than that? Okay, I'll explain to you a little bit later. But those growth companies that have 22x P price to sales ratio, 30 price to sales ratio, 127 price to earnings ratio, those that are at extremely high valuations, okay, it doesn't mean that they can't stay there for a period of time. But when a market crashes, when it's dragged down by overall, a market weakness, a lot of people who are already up massively on those companies would tend to take some profits. And those were the companies who, you can quote me on this, that will actually, suffer the most. And they will actually tank those 50% drops, more than 50% drops. And those are the companies that will be, in a sense, more risky if you have your entire portfolio centered around growth companies. Okay, and today's talk I'm going to talk about is a company, right, that I've been looking at for the past 3 weeks, actually. And I didn't really have much time to look very deeply into companies. Okay, I do like to do research on different companies, and my research includes of reading their transcripts, reading their go through their financials, and it's a lot of work. Okay, and before I recommend longer term plays or something that you need to hold for the longer term. And in my portfolio, I'm currently holding long term NIU, New, Rocket Companies, Teladoc, okay, and ArcG. Okay, these four holdings are one of my massive holdings that are out there, and I'm holding for the long term because I believe very firmly in its long term aspects, and I'm holding it for the long term. But today, I may want to allocate some of my swing trade portfolio and some of my even reduce some of my positions in my short term plays, to place in this value plays, because I feel that there's a very high chance of a overall market pullback right now. So I'm looking into this value plays a little bit more. On today's topic, we're going to talk about jikh. Okay, I've been looking at this company for very long. Okay, so let's take a look at this charts, right? Okay, let me tell you where I've been looking at this company. I've been looking at it, okay, since around, let's see, December, okay, late December around here, okay? And it has been actually consolidating this nice wedge pattern over here. But however, okay, at this point, right, if you just look at this area over here, right, I'm like, okay, it's not really a wedge because it looks like more of a downtrending pattern. Okay, it has hit a high over here. Right, it's hit a high over here, okay, and it's going on a lower high, lower low, and it's going down here, okay, and I'm like, nah, if I really want to trade this, okay, actually I looked at this as a swing trade at the start. So I was like, if I really want to swing trade this, there's better opportunities elsewhere. Okay, and I didn't really look into its financials until recently. Okay, it popped up all the way here. Okay, and one of the reasons is because I think there's a lot of Citigroup starts bumping up this company. Okay, and Bush bumped it up to 85% analysts that price target, which is now they are now at like $67. Okay, a lot of the analysts starts upgrading their price target. Okay, and recently they start to make a move, and more more people are looking at it right now. And as I take a look and do more research, right, I realized that this company, okay, is not a swing trade play. So in a sense, it's not really a play on its technicals, but it's a play on its fundamental business and fundamental news. Okay, let's look at its valuation factors. Okay, again, as I said, to hedge, right, you want to find companies that's really, really cheap. And what do I first look for? I always look for price to sales ratio. Okay, price to earnings is important, but price to sales is even more important, especially I feel that in this pandemic where there are a lot of costs that are incurred, right, during this pandemic time, where these kind of, especially the retailers, they have to incur so much cost in, protecting their customers, protecting their staff, and they will be actually spending a lot of money on, in protecting everyone, and a lot of additional costs and miscellaneous costs to control the spread of, of any diseases. And yes, again, I look at price to sales ratio, and guess what is its price to sales ratio? Just take a guess. Okay, its price to sales ratio, it is extremely cheap. Okay, extremely cheap. And what do I mean by that? Okay, its price to sales ratio, it is 0.66. Okay, normally a price to sales ratio of 1, right, is considered pretty darn cheap already, especially in this market where everything is overvalued. Okay, in a sense, it's overvalued market. Okay, it's like most of them are trading at more than 10. Okay, price to sales ratio is lower than 1. Okay, it's 0.66. That means for every its sales, right, and its price, right, it's lower. Its price is, for every single share, price is lower than its sales, which is insane. Okay, but okay, low price to sales ratio can mean two things. Okay, so let me just guide you on this so that you will learn something from this. Okay, price to sales ratio can be low because of one, it is at a very good price. 2, it might be because of it is a trash company. Okay, that means their sales, right, is so trash, right, is so bad, right, that its price divided by sales, right, is very low. But okay, it can also mean that its price, okay, it could be very undervalued. That means for its amount of sales, right, not a lot of people is actually looking into this or buying into this company. But how do we know that? Okay, what we want to look for is this. Okay, quarterly revenue growth. Okay, so if you see it's negative quarterly revenue growth, right, that means it's probably the latter. That means this company is just trash. It's not even earning a lot of money. That's why people are not even buying into this company. That's why its price to sales ratio is so low. But no, this company, right, even in this entire Rona Finanza, right, it is growing quarterly revenue year over year at 22.9%. Insane. Okay, you must understand that, and in this kind of times, right, it's very difficult for these kind of retailers to increase their earnings because, okay, but however, they are actually earning 22.9% of revenue growth. And another thing is, right, you look at this, okay, global e-commerce transactions up 24% this holiday season, okay, and you can see that DKS, right, year over year growth 22%, quarterly earnings growth, right, earnings 208% quarterly earnings growth. Insane. Okay, and I feel that they are actually that means they're managing their costs really well. Okay, they might have been beaten down because they have been managing their costs, but it shows that their management is very well in controlling their costs, selling unneeded assets, and controlling the cost to a very high level to achieve a quarterly earnings growth of 207%. And one of the reasons is because look at this, right, this title. Okay, I read all these articles already, but I'm just going to give you the title itself. Global e-commerce retail transactions jump 70% from Thanksgiving to Cyber Monday. Okay, DKS, right, what I love about this company is besides being a retail company, they are pivoting or transitioning to an online business, e-commerce, okay, and they have the brand, okay. DKS is Dick's Sporting Goods, right? They have the brand itself, they have the brand, and once they pivot over to e-commerce, right, profit margin is going to increase, assets and revenue is going to increase, and so far they have been doing very well on that aspect. And wow, it's insane, okay, totally insane in that aspect, and they'll be projected to grow massive revenue in the coming weeks and in the coming months, and I'll have high expectations, the next earnings season, and the next earnings season estimated should be around March. And yeah, so this is a good time, for me to, build positions in this company. And it's so cheap right now, right, that I just can't help it. You gotta allocate some of your portfolio into this kind of value companies because there's just so much more room to grow. Okay, it's so much more room to grow for this company because recently they have really been pivoting its business so that it has the nice little brand name, they have nice sales, they have good sales, if they can increase massively, by then this will be a company to look forward to. And now we're going to look at their technicals itself. Okay, again, as I said, this is a fundamental play on this business. So valuation or the technical aspect wise, right, not a lot to worry about. Okay, just buy. If it dips, average down. Okay, but if you really want me to take a look at its technicals, right, I will do that for you guys. And so let's take a look. All right, so recently, okay, you can see that it has gone on to a high. So, okay, let's look at the year-to-date drawings. Okay, it has reached a high. Okay, recently, okay, in a sense, the perfect entry point, right? For those of you who are very, very good, that have been with me for some time. Okay, where's the perfect entry point? Okay, the perfect entry point will actually be here. Okay, it actually be here. Okay, where all the lines converge. Massive upside. Okay, I was so sad that I missed this. Okay, I could have gotten in so much, built my position at $55, but it's still not late. It's still not too late. Okay, it's still so darn cheap. Okay, 0.66 price to sales ratio. Okay, trailing or it's forward PE 13 forward PE. Okay, right now, okay, it's experiencing a small little pullback. Okay, down to the 20 moving average. Okay, and honestly, if you really look at this for a longer term play, right, you can just start buying around here. Okay, start buying around here. If it dips to the 20 moving average, buy around here. If it dips last time all the way to the 50 moving average, add massively around here. Okay, anything around $58, right, is a buy. Okay, around $58 is a buy. Okay, $58, $60 for me, myself, is a buy. I'll add massively in these positions. Right now, I'll probably get some skin in the game, just in case it rallies up higher. Just put a small little position in this. So, example, if you want to put like $3,000 in this stock, right, I'll put like 500 right now, so that I kind of, get some money inside this company, and I'll monitor it a little bit closely. And if it dips, add more. And if it dips all the way to $58, which I think honestly is quite unlikely, yeah, just add more. Okay, and again, have more cash on hand in case of a market crash. Okay, if really a market crash comes down, right, it comes crashing down. It starts crashing down all the way, right, all the way down here, right, I'll be very comfortable in holding this company. Why? Because firstly, it has already survived kind of the worst of the pandemic, right? It has survived. His sales have been rebounding since then. So fundamentally wise, this company is not gonna they're coping very, very well. Okay, and as the vaccines are coming out, economy starts reopening. I can see the sales just massively increasing for this company. And if it really does crash down all the way here, right, I'm very confident holding for at least a couple months, even a 1 year. I'm very, very confident that in a few years' time, right, it will rebound back to the $67 and even way more than that. Okay, my price target for this in 3-4 years after doing the discounted cash flow model is around $130. Okay, $130. Okay, in 3 to 4 years time. Okay, I like to give a very conservative estimate. Okay, I know that everybody's been numb because everybody's been getting 100%, 200%, 300% gains, in the last few months on different stocks. But I want to let you know that this kind of market is really, really not normal. Okay, remember that in the past, 20% per year is counted pretty decent. 30% pretty decent. Okay, so we must think that this is not the norm. It's not going to last forever, but enjoy it while it lasts, and we do our swing trades while it lasts. Okay, if you haven't watched my swing trade video, go and watch it right now. Okay, but do take into account that we want to get exposed more to these kind of value plays and safeguard our hard-earned money. Okay, and that's it for today. Okay, if you really, really like today's video, okay, smash the thumbs up button for this educational content, and for all the research that I've done to find out the best stocks, for different kinds of plays, like value plays, trend reversal plays. And yeah, I really hope you guys enjoy this, and subscribe to the channel for more educational content like this. And I shall see you in the next video. Stock is stayed up.